Good afternoon and welcome back to the Market Insights webinar. Thank you all for joining us today. This is Mackenzie Box, your special guest host today. And we're so glad to have you join us each week to hear some insights about the overall marketplace. I just want to thank everyone for continually to join our webinars and to constantly send in questions each week, because that really helps us drive content and drive ideas and themes of what we want to talk about on these webinars. So with that, let's get started. So first and foremost, as always, some disclaimers. We have InvestorLine with us today. So just reiterating that this is not advice. This is simply insights into the marketplace. And of course, a second disclaimer, this one from BMO Global Asset Management. Again, just highlighting, we are just giving insights. This is not advice driven. So to kick it off, I've got a great lineup of guests with me today. April Cody is joining us from Msci, who's been here with us before. We have Aaron Allen from our ETF product team and Hakan from BMO InvestorLine. So thank you everyone for joining me today. And this week, I think we're going to shake things up a little bit and introduce a new segment into our weekly webinars. So we're going to call this, I think, the 1-minute ETF market update, which really just highlights what we've seen in the market the last week or so and where flows are going and kind of some of the themes that we see emerging. So given this week that we're focusing on socially responsible investing, I thought I would highlight some of the recent flows into ESG and ETFs. And of course, I want to highlight that BMO ETFs just received a very large flow, which now makes us the largest ESG ETF in Canada. However, I think it's really important to note that we are starting to see a lot of assets shift towards ESG and socially responsible products. And I think this is now just the proof in the pudding that, you know, now more and more people are allocating their dollars to these kind of themes that impact their social lives. So with that, we always like to kick it off with some helpful tools for you in the market. So first, I'm going to pass it over to Hakan to talk about his promotional offer at BMO InvestorLine.
Thank you, Mackenzie. I am a huge fan of the Market Insight webinars. Today, we have two great promotions for our audience. Our award-winning self-directed platform, the InvestorLine, you will get $4.95 on your equity and ETF trades for the next 90 days. All you have to do is to open up a new account with BMO InvestorLine and enter the promotion called Invest Smart. If you're looking for advice, our digital advice platform, Advice Direct, you can earn up to $2,500 on cashback promotion. Again, if you open up a new account with BMO InvestorLine Advice Direct, just enter the promotion code Digital18. If you go to the next slide, please, Mackenzie. The world is changing, and so is the world of investing. You don't have to choose between your long-term financial goals and investing in responsibly managed companies. We at BMO have created an interactive tool that will help you recognize your approach to investing and what you value called My ESG Tool. 6 simple questions to figure out what type of investor you are based on 4 personas. Pragmatic, you're open to ESG options. Spectacle, performance-focused, but you want to learn more about ESG investing. Ready to make investments that reflect your values. Motivated, you prioritize positive impact in your personal investment choices. Thank you, Mackenzie.
Thanks, Hakan. Yeah, this is a great tool, and I know we've highlighted it on another Market Insights, but definitely something that if you're interested in ESG and want to find out, you know, kind of things that work towards your portfolio, this is a great solution. So next, I'm going to pass it to April. You know, MSCI is a leader in this space. So April, maybe if you can just highlight some of the public tools that MSCI has for investors that they can leverage as they're doing research as it relates to ESG.
Absolutely, Mackenzie, and thank you. So MSCI is proud to be a leader in driving transparency to raise the value of ESG data and ratings, and really improve disclosure standards of companies. And so the two tools that I'll highlight today is first, the MSCI ESG Rating Corporate Search Tool. And this search tool, again, is publicly available on msci.com, and it provides the ability for investors to search over 2,800 companies, the constituents of the MSCI ACWI index, and you can search by company name or by ticker, and you can view the ESG rating, so the overall ESG rating of the company, the ESG rating history, so you can see if the ESG rating has improved or gotten worse, or has it stayed static. And then also the ESG rating distribution by industry. All of the ESG ratings are industry specific, so you can see within that specific industry or sub-industry how the company performs relative to its peers, as well as the industry-specific key issues and how the company performs on those key issues relative to its peers. And then additionally, we also have available publicly the ESG Index Comparison Tool. And this provides an overall ESG score relative to a defined benchmark. So here the example is MSCI Canada ESG Leaders Index, and the benchmark being the MSCI Canada Index. So you can see the overall score of the index comparative to the benchmark. You can see how the company, how the index performs in regards to UN Global Compact violations or severe controversies. You can also see the consolidated ESG rating of the index or benchmark, and the top 10 holdings or constituents and their ratings. And then to take it at one step further, you can also see the ESG, so the environment, the social, and the governance scores of the index or the benchmark.
Awesome. These are great tools, April, so thanks for highlighting it. So these are publicly available if anyone is looking to do some more research. We've included the URL here. So thanks, April, for highlighting those. I personally find them really useful.
Great.
Now, let's get into it a little bit more. We're seeing a lot of ESG, socially responsible, in the news. I think this is something that's really dominated the headlines in the last year or so. Erin, I'm going to pass it to you to just give us some insight into this and what we've kind of seen develop in the last year or so.
Sure, thanks, Mackenzie. We had a really difficult year last year. I think that's the understatement of the century. And one of the clear messages that really came from 2020 was that environmental, social, and governance concerns are here to stay. Some of us thought that in the face of a pandemic and an economic crisis, that this kind of building momentum in ESG would diminish. But really the opposite happened, and I think that's interesting. The pandemic instead has triggered a debate around what do societies actually value. It's exposed inequalities. And at the same time, it's proven how interconnected we are as a globe. It's also sadly shown how societies fail to prepare for future disasters and only address issues once it's too late. And this makes me think of climate change, where we still have time and we know it's coming, and there's things that we can do today. So many now see the coming months and years as an opportunity to really rebuild economies with ESG front and center, so focusing on corporate purpose and sustainability. And I think that's really exciting and maybe one of the few good things to come from last year. We saw in 2020 demand for greater gender and racial diversity at management and board levels in the midst of the Black Lives Matter movement. We also saw Joe Biden elected as president of the US, and since then he's taken swift action on climate change. So these are some of the changes that I think are going to really make investors reevaluate some of the decisions they're making both as investors and consumers. We're facing all kinds of these issues, environmental and social, so a connection has to be made between what's going on in the real world and our investment portfolios.
Couldn't agree more, Erin. Thank you. Now, April, I'm going to pass it back to you. We know that, ESG and responsible investment, taking things from more of a social side, we can't really ignore this anymore, but maybe if you can just kind of set the stage and really define what is responsible investment and ESG.
Yeah, absolutely. Happy to. So maybe let's just start off with the definition of responsible investment from the UN Principles for Responsible Investment, as that is a generally agreed upon definition within the industry. So responsible investment is an approach to investing that aims to incorporate environmental, social, and governance considerations into investment decisions to better manage risk and generate sustainable long-term returns. And so what I think is important as we lay the foundation and groundwork in understanding responsible investment in ESG is that there are different definitions and labels put on this type of investing. So some of them, you'll hear responsible investment, SRI, ESG, values-based, but really at the heart of it, it's looking at environmental, social, and governance issues, and I'll get into those a little bit further. And then within those pillars, there's different approaches to incorporating ESG or responsible investment. And at Msci, we look at integration approaches, values-based approaches, or impact approaches. Now, if we specifically look under the E, S, and G, you'll see a few examples. We've highlighted 3 examples for each category here. But I would highlight that those examples or the sub-indicator areas are really just examples and not holistic. And so each company and each industry, or pardon me, I'd say each industry is evaluated on their own specific E, S, and G risks. And so you could imagine a company, for example, in the food and beverages industry, or someone like Coca-Cola, has different E, S, and G risks than a company, for example, like Apple, a technology company. So it's important to understand ESG risks within the industry specific context. I would acknowledge also that while each industry has specific environmental and social risks, within the governance category, there are more universal, what we would call universal key issues that are applicable across industries within, for example, the corporate governance and corporate behavior categories, such as business ethics and executive pay.
Thanks, April. That was very insightful. And I think one of the other things too is this has really evolved in the recent years too, and I think we're learning more, but now I think we have a good framework to help define it for investors as well. So I'm going to pass it over now to Erin to talk about some of the common investment approaches when it comes to socially responsible investing.
Yeah, there are many approaches to responsible investing, and I like the spectrum because I think it does a great job of outlining them. I will start by saying the list is not mutually exclusive. So many of the products out there are going to combine 1, 2, or 3 of these different approaches. They may, exclude those sin stocks and controversial businesses. That would be the negative exclusion, but they may also use integration in their selection process as well. Historically, responsible investment revolved around negative exclusion. So as I mentioned, removing those sin stocks from the portfolios like guns, alcohol, tobacco, really for those people who are looking to align their investments with their values. But this evolved, and ESG integration has become much more important and a really rapidly growing area where ESG risks are incorporated into the actual company analysis and the portfolio construction processes. So we've seen a lot of thematic and impact products coming to market recently. And these are products that are focusing on key issues. So climate maybe, or clean energy, or gender inequality. These are great products for those who are really wishing to align their investments with their values or target a specific issue. That kind of covers off the overview of the different approaches.
Thanks, Erin. And now we're just going to dive in to, you mentioned there's different products that have kind of grown across the spectrum, but let's just talk about the growth within the ETF category. Globally, we know it's been very popular ESG in Europe, but talk about how it's evolved, and then more specifically, how it's evolved in the Canadian marketplace and how different products investors can access.
Yeah, you mentioned in your opener just the sheer volume of assets that are being put towards responsible investment products. In 2020, ESG ETFs saw net inflows over 75 billion US. So that was more than 3 times that in 2019, or to put it in greater perspective, 10% of the overall ETF net flows globally. So it's also been a big growth year for new ESG ETF products as well. So there's more than 120 that have been launched globally. And we launched 8 at BMO ETFs alone last year. So as you mentioned, you can see in the chart here, majority of investors have been buying ESG or have been in Europe, but we are seeing a lot of traction in North America as well. We're not far behind, but Europe has definitely been the early adopters. You can also see that the majority of investors have been buying equities, but we're definitely starting to see a shift here, more interest in fixed income as the research has emerged and media has picked it up, and we're really seeing the benefits of risk mitigation around that ESG factors can bring to fixed income as well. But if you go to the next slide, I mentioned we have 10 responsible investment ETFs now. So we use a variety of the different approaches that I mentioned in the previous slide. We have our broad-based equity ETFs that track the MSCI ESG Leaders Indexes. So this index is one of the most popular ESG indexes around the globe. It's widely used as a benchmark for institutions. And what it does is it just provides broad market exposure across all the sectors to the top ESG rated companies in each sector. We also have 3 fixed income ETFs built along a similar approach. We have a balanced ESG ETF, which is interesting, ZESG, which takes all those fixed income and equity building blocks I just mentioned and creates a balanced portfolio for investors that's, one ticket, easy to use, and it rebalances for you, and it's a low cost option. And last but not least, we have 2 thematic exposures, one focusing on clean energy, which has been very topical as of late on the back of Biden's election, ZClean, and a women in leadership ETF. So that addresses the gender inequality theme. You can see here in the pie chart, we are #1 in terms of market share in ESG ETFs here in Canada. We have the largest ESG ETF, as Mackenzie mentioned. But if you want to find out more about all the responsible investment products available in Canada, you can visit the website that we've linked here, the RIA website, that has greater detail in terms of everybody's offerings.
Thanks, Erin. And yeah, it's great to see there's lots of growth, and I think this is something we'll continue to see, in the years to come as we have seen many product launches in the last little bit. Now I'm just going to shift gears a little bit and bring April back in to really talk about, now we have lots of products out there, for end investors, but when you think about ESG, where's a lot of the smart money going, and who's adopting these kind of strategies across the board?
Yeah, absolutely. Thanks, Mackenzie. So similar to other categories such as global investing or factors, with ESG, we really have seen the asset owner client segment drive adoption and flows from the initial days. And so when we talk about asset owners, we're really talking about pension funds, endowments, foundations, for example. And so what this slide here does is highlight some of the allocations to MSCI ESG equity and fixed income indexes globally. So we have seen historically Europe, or EMEA specifically, lead in terms of ESG adoption at the policy benchmark, as well as allocations. But over the last few years, we've also seen now growing adoption in both North America and Asia. So this slide here really highlights globally that trend that initially started in Europe and has now been picked up or adopted globally. And some examples that I would highlight, one, of course, being in Canada, the Ontario Teachers Pension Fund in 2018 adopted the MSCI ACWI X Canada X Tobacco Index as their policy benchmark. Additionally, we've seen Ilmarinen, which is a very large Finnish pension fund, invest over $5 billion into ETFs globally that are linked to MSCI ESG leaders. As well, a few years back, Swiss Re allocated $130 billion in active listed equity and fixed income to MSCI ESG leaders and the Bloomberg Barclays MSCI Corporate Sustainability Indexes. And so I highlight those three examples specifically because I think they give a nice snapshot of the different use cases that we have seen asset owners drive adoption with. One, being a policy benchmark. Two, through ETF allocations or passive allocations. And then thirdly, through active equity. So really we're seeing the continued global adoption of ESG indexes, both at the equity and fixed income categories across the different use cases.
Thanks, April. Yeah, I think this is really insightful and great to see that some of these large pension funds and the institutional money is actually setting aside big flows to socially responsible and ESG related products. So I think that speaks volumes to just how important and how much this segment will continue to grow. So next I'm going to pass it over to Erin briefly. So, we all know ESG is growing, and I think a lot of people are thinking it's important, but does this actually impact your performance? So Erin, I'll pass it to you.
Yeah, that's the big kicker. Does it impact your bottom line? And it's definitely one of the biggest myths out there surrounding responsible investment. Many think that you have to give up returns to invest responsibly, and we're seeing more and more evidence that that simply is not true. Here we are showing a comparison of ZESG, which is the ESG balanced ETF that I mentioned, versus the iShares equivalent XBAL, which is a similar product, but kind of the non-ESG equivalent. And you can see how similar the performance is. And this is over the past year, as that's the time frame we have available. So that's a powerful image there. You can have your cake and eat it too. Hakan, do you want to just jump in here and explain the Market Pro tool a bit, and how you can do this analysis?
Definitely, thank you. So Market Pro is what I'm very passionate about. It is our streaming quotation system that we have created, or we are using for our 5-star customers to get access to real-time quotes. It's a top-of-the-line investing platform where you can create customized trading dashboards, use top-of-the-line investment tools, analytics to make informed decisions. You have different studies for active traders. You can have different dashboards, including market bet, level 2 quotes, in-house, who's buying, who's selling. So it's a really, really great tool to help you to make a decision. That is one of the showcases of our 5-star platform. And if you guys would like to know more about it, just at the end of it, you can ask me questions. Thank you. And back to you, Mackenzie.
Thanks, Hakan. And now the other thing I just want to get into is, what are the studies showing about why ESG now, and how is that not, and how does it further show that you don't have to sacrifice performance to get the exposures that you want? So Erin, I'll turn it to you.
Yeah, research is definitely showing that using ESG factors in your approach can help with risk management. So it can help reduce volatility and it can provide protection on the downside. We've posted 3 studies here, but there are so many more. Oxford research shows that 88% of the studies they looked at showed a positive relationship between the company level sustainability practices and the company's operational performance. Bank of America Merrill Lynch found that companies with poor ESG standards have higher volatility in earnings. So we all know what happened with stocks like Valiant and Volkswagen in terms of corporate governance and BP in terms of their environmental impact. We know what happened to their stock price during these ESG incidents. And there's evidence that using ESG factors in your approach can actually help you avoid some of these stock blowups relating to ESG incidents. And I think, Mackenzie, if you go to the next slide, another difference today as compared to 10, 20 years ago is that we've seen huge developments in the data available to us, which is really helping us to move beyond just our beliefs and look at multiple factors across sectors and industries to really identify those companies that have the lowest ESG risk. Companies have been releasing more publicly available data and technology. Technology is allowing firms like Msci to leverage alternative data sources like media publications and artificial intelligence. You know, Msci is the leading ESG research provider. They're dominating the industry, and we really loved their approach when looking for an index partner for our ETFs because of just the robust system that they have for analyzing a company. So April went into it slightly earlier, but here we're just showing Msci's approach to the data where they look at industry-specific ESG considerations and rank them with a score that's similar to one used by bonds. So AAA and AA being those ESG leaders, the top of the pack, and B and CCC being the laggards or the companies to avoid. April mentioned, you know, we shouldn't be comparing a soft drink company to Apple or to a Canadian bank, for example. And I really feel that that's one of the strengths in their process as well. Their data really is the best in the business.
Yeah, totally. I couldn't agree more. And I think the way it's put out there, it's easy to understand. And, you know, when you're doing your research and you want to learn more, you know, it really shows those who lead above the pack, if that's what you're interested in, versus those that are average and those that are a little bit behind. So nice, simple system. Now, Erin, can you just briefly give us kind of an overview about active ownership? You know, we hear a lot about this, and I know we've talked about this briefly on other webinars, but more so the importance and why it's such an important consideration for companies.
For sure. Active ownership is basically the other side of the coin when it comes to responsible investing. It's where the asset manager can engage with the companies that they hold in the portfolio and vote on ESG issues in order to drive change. So investing in a responsible investment or ESG investment is one thing, but having that firm that you're investing with, taking it a step further and taking action using their professional expertise to call for change is really powerful. So I'd say do your research around whether the firm you're investing with does take an active stance on active ownership. And if you go to the next slide, I've included a chart on shows BMO relative to our peers and how we vote against management more often than anyone. And this really shows our active approach to active engagement. We're not just blindly following management's lead in our voting, we're really doing the work and looking to drive change. BMO GAM has been a UNPRI signatory since 2006, and we have an A+ rating on our active ownership for equities, as well as our strategy and governance. So we're really being recognized as a leader in the space. But if you want to do your due diligence and look into the firm that you're investing with, you can find information on the UNPRI website for a firm's voting record. BMO also shows this on our website as well for ourselves.
Yeah, I think it's really important to do your due diligence and understand just how these companies are voting. And I'm going to pass it back to you, Hakan, just to highlight some of the Advice Direct tools and actions specifically as it relates to socially responsible investing. Hakan, I think you might be on mute.
Thank you, Mackenzie. Yes, I was. Thank you for reminding me. As part of the Advice Direct online investing platform, you will have access to a research tool, which you could consider as your own research department at your fingertips 24/7. And all you have to do is key in the symbol of the equity or ETF you like to research, and it gives you the information. This particular case is a screenshot of our research screen for ZESG, and it will give you a quick update of the allocation mix, the geographical mix, the sector allocation, the past performance, and the breakdown of the top 10 holdings of the ETF or the stock you're researching. If you can go back to the next slide. For more information on how to get started with BMO and online investing tools, please reach out to me directly. My contact information is below. And our mission at BMO InvestorLine is to inspire and empower you to invest smarter. Just to remind or reinitiate our promotions we have. For our traditional online investing tool, the promotion code is InvestSmart, where you get 90 days, $4.95 trading on equities and ETFs. Our digital advice platform that combines the freedom of self-directed investing with personal advice and support. The promo code is Digital18, and you can get up to $2,500 cash back. The promotion period runs from March the 3rd until June the 1st. And you have until June 30th to fund the account, and the funds have to remain in your advice account until November 30th, 2021 in order to receive the promotion. Thank you, and back to you, Mackenzie.
Thanks, Hakan. So now we're just going to switch gears and dive into just a few questions. I think just out of the interest in time today, we're going to focus on, we'll just answer a few, and then hopefully next week we can get to the rest of them. And we will email you back if you have any questions that we haven't addressed. So first question, what is the best way to access an ETF for both Asia and India? Aaron, I'll pass this over to you just to get your thoughts on this.
Yeah, so most ETF providers will have ETFs that help you access these areas. ETF is obviously a great way to access these markets because they're more diversified, and these international markets can be a lot more difficult to trade on your own. So really you're going to need to decide whether you want a pure play on Asia or India, or if you'd like to invest in the broader emerging markets. So BMO, for example, has ZEM, our emerging markets ETF. It's the largest in Canada, and it has over 50% exposure to Asia and close to 10% in India. We also have a China ETF, ZCH, and an India ETF, ZID, if you're looking for more pure exposure to those regions.
Yeah, and I would just encourage you to explore providers' websites and do your due diligence around that, and make sure you look at what they're holding and what is available. Okay, I'm going to pass this one over to April. How can I find out more about an ESG rating? So April, you talked about some of the great tools, but maybe if you just want to dive in here on some of the great stuff that MSCI has.
Yeah, absolutely. So I highlighted, I think it was on slide 8 or 9, but MSCI's ESG corporate rating tool. And so that is a publicly available tool that you can go right online to msci.com, and if you search ESG rating, the tool will come up, and you can put in a stock ticker and see the ESG rating and the other indicators that I had and scores that I had highlighted previously for those specific companies. So for example, you can put in BMO, or you can put in Apple and so forth, MSCI, and see the overall rating of that company, as well as how the company performs relative to its industry peers, and how it performs along the specific ESG categories. So there's 2,800 companies Most of the large cap and medium cap companies globally that you can think of are publicly available.
Great, thanks, April. And again, I think that's a great tool. So if you are looking to do more research, I would encourage you to check that out because there's a very robust amount of information out there if you're interested and you want to dig a little bit deeper. So I think we just have time for one more question. This one again focused on ZPay. So Aaron, I'll pass this one over to you. I think you might be on mute, Aaron.
Oh, sorry. Okay. Yeah, I am on mute. I was on mute. Yeah, so I'm a keen ZPay investor. Can you explain how the income is generated? Does ZPay offer a dividend to investors? And can you explain how the payout works? So I love it. Glad you're interested in ZPay. For those of you who aren't familiar, it's our premium yield ETF. And ZPay writes put options and covered calls on a basket of blue chip large cap US equities. So these companies are going to be paying a dividend, so a portion of the income will be dividend income, but the majority of the income is going to come from the options that are being written on the portfolio, and that is taxed as capital gains. So it's actually a very tax efficient product. The ETF pays out monthly, so we aim to keep this monthly payment consistent with what the ETF is earning, and we also aim to keep it consistent month to month as much as possible. But yeah, if in the essence of time, if you're looking for more information, we did a market insights on this last year, so you can go to the market insights page and look at past webinars to do kind of a deeper dive on the product.
Yeah, I think there's lots of great insight on ZPay in the previous webinars, and we do have some great information on our website as well. So given the interest of time, I'm going to thank everyone for joining us today. Thank you to April from Msci, Aaron and Hakan at BMO for joining us today, and look forward to having everyone back here tuning in next week, Friday, March 27th at 1 o'clock, where we will be focusing on inflation. So thanks everyone for joining. Have yourself a great weekend.